From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming July 7th Forex session in the Euro US dollar pair. You can see that Friday we did in fact continue the sell-off that we've seen over the last several sessions. However, I would caution getting too excited about it. After all, Friday was Independence Day in the United States, thereby really affecting liquidity. I look at this as a marketplace that has a couple essential levels that you need to pay attention to right now. I think that the level 136 is important because it is the middle of the entire consolidation. The outer levels, as I'm drawing with a couple different lines at each place, we'll go ahead and use a box instead. You can see that this is the area that we've been kind of trending in. I think that there's a zone that extends all the way to 137.50, so the upside is going to be difficult. At the same time, we really haven't been able to break down 135, and on longer term charts, I think that if we break below 135, we probably will drift quite a bit lower, maybe about 133. In the meantime, though, we find ourselves just simply right dead in the center, in no man's land, if you will. Short-term trading at best. I prefer to buy at the bottom, sell at the top until I'm told, in other words, until we break out, by the market, something else to do. Right here in the middle, it's more or less a coin flip at this point. Yes, I can make an argument why there could be support there, but we have sliced through it a couple times already, so it's obviously not that important. I think simply waiting to get to the outer part of the consolidation is the way to go. And again, eventually we will break out. So this is one of those situations that really comes down to how you play it, but you could be very aggressive in the sense that you sell every time you get up there or close to it, and you buy every time you get down here. Sooner or later you're going to be wrong, but the idea is you get 3 or 4 or 5 wins and then 1 loss. Well, you've still made money, and that's all you're trying to do. If we do break higher, above 137.5, that would be a very bullish sign, probably head to about 139.5. But I really don't see that happening anytime soon. I don't really see the catalyst, and we could just simply stay in this general vicinity in the meantime, because we're heading into the summer, and the markets can get fairly quiet. So that being the case, I'm on the sidelines right now, but I do have a couple of definite areas that I'm paying attention to. And where we move from here will more than likely dictate the next trade, which will be about 100 pips away in either direction.